So I got this amazing question from a new client yesterday. He said, when I move down there, will I be able to get insurance? Great question. Let's get into it. I'm Sam, and this is the Living in Tampa channel. We make these videos for you about what it's like to live and move to the whole Tampa area. We're also a team of realtors, and we'd love a chance to earn your real estate business. So if you want to buy a house in the area or sell a house in the area, give us a call. Our phone number and email are right there on the screen and in the description down below. So this question about insurance came from a buyer reaching out, moving down from the Chicago area. And he was like, hey, is the news correct? They say in Florida you can't get insurance sometimes. What's that about? He was very understanding that this is all probably a little bit exaggerated. And in the midst of this conversation, I thought it would be good to share some common insurance questions with you. And let's get right into it with that first question. Let's phrase it like this. What if I can't get insurance? Let me share from my own experience. I bought a house that was 60 years old. You've seen me talk about that. You've seen it flooded probably, all those kind of things. When I bought the house in September 2020, the roof was 16 years old. That's kind of the cutoff. If the roof is 16 years old, insurance is just telling you, hey, you need a new roof for insurance. I said, okay, well, we negotiated in the contract. I'm telling the insurance company, we negotiated in the contract, the seller's going to contribute part of the money, and I'm going to put up the rest. Once we close, I'll get the roof replaced. They said, okay, you have 30 days to give us this updated report, and we'll get into what that report is, the 4-point inspection. It's a very Florida thing. Give us that within 30 days, and your premium will stay locked. I didn't do it because the roof wasn't leaking. I have little kids. I'm running a business. It just didn't feel that urgent to me. So they sent me a letter and said, we're dropping your policy. I called them and said, hey, please don't drop me. And they said, okay. They said, your premium's going to go up $400 a year. I said, okay, that's fine. I'd rather pay $400 a year for a few years than pay for this $10,000 roof all of a sudden. So it worked out fine. It doesn't always work like that, but you have to be the person that calls and asks those kind of questions, especially when something like insurance in Florida is as muddy as it is. Okay, so that was my story, but let me talk about a few different clients. One's listing we have right now, the Kennedys are selling their house that we helped them buy a couple of years ago, and their roof needs a couple of repairs. Whenever they bought the house, it wasn't that big of a deal. It was obviously needed to be replaced eventually, but it wasn't really a factor. So now it needs about $1,500 in repairs for the insurance to check out. Again, we'll come back to that. What do I mean by insurance checking out? So we just negotiated into the contract. The buyers came forward with a really good offer, so we agreed to make that concession to get that fixed and to get a couple other things fixed. No big deal. We got a roofer out there to do it while it's under contract. We'll get the updated report. And let's talk about that report. It's the 4-point inspection. So the 4-point inspection is a very condensed version of the big inspection. It's just inspecting 4 different systems specifically. HVAC. Is there air conditioning? Is there heat? Electrical. Is it up to code? Are all of the breakers and circuits connected correctly? No double taps, no exposed wires, things like that. The plumbing. Is everything working and are there no leaks? It's not going beyond that, is this the proper fitting? It doesn't matter. And then finally, the roof. Is the roof within this age, under 16 years, and is it free of leaks? And is there no obvious damage? Part of that listing that we're having repaired is it's missing a few shingles because of a storm. So that 4-point inspection is checking those things. You have to have a clean 4-point inspection. Really no red flags on those things to get insurance easily. That is the biggest holdup on getting insurance, is the 4-point inspection. And occasionally throughout the years, insurance will want to come re-inspect your house. Maybe you got a home equity line of credit to do a bunch of renovations and they want to make sure everything is done. Or maybe there was some kind of big claim, like a flood insurance claim, and they want to make sure everything is, current and livable and functioning, insurable. Let's go through another example, because some homes are uninsurable. We have these other clients selling a historic home, a pretty valuable home actually, on a big piece of property in St. Petersburg. This house has I mean, deferred maintenance is kind of a gentle word for it. So essentially the stem wall wasn't installed correctly under one of the walls. The wall is kind of sinking a little bit, and as it's doing it, it's like ripping the trusses off the top. So the roof needs to come off, all the trusses need to be replaced, and in the midst of that, they lift up the foundation, they backfill it with a specialized kind of foam, that is if you want to actually keep that house. It is a really quirky 50s house, so the people that have been interested in it have been interested in keeping it, but to do all that work is kind of extreme. And the reality is you cannot get insurance unless you do that work. Now, maybe some kind of blanket coverage, but not like a homeowner's insurance policy, which is a great transition into the next point. What is the difference between homeowner's insurance and flood insurance? I've been asked this a lot. Homeowners or hazard insurance insures your dwelling and your contents for hazards. If a pipe breaks in your plumbing or your hot water tank, or if it gets struck by lightning, or if there is a fire, those kind of things, there's wind, even wind from a hurricane even would be covered with your homeowner's insurance. Flood insurance is for rising water. If there's a hurricane and a limb breaks off a tree and breaks a window and water comes in there and causes water damage, that's not flood damage. That is wind damage that led to water damage. So those kind of things are really the differences between homeowners and flood. Homeowners is required if you have a mortgage. Flood insurance is required if you have a mortgage and you're in specific flood zones. If you don't have a mortgage, you don't have to have any of this. You can self-insure, which means you have a savings account to pay for all this stuff, but not many people are in that situation. So that was number 2. That's just kind of differences between homeowners insurance and flood insurance. Number 3 question I get asked a lot is, will my insurance double? Maybe not. First of all, let's talk about why it doubled in the past 3 years. In 2020, insurance started going up. That was because claims started getting paid out, and material costs, the cost to replace a home, to rebuild a home, had gone up significantly, and insurance companies started losing a ton of money. Look back at how much State Farm lost in 2021. It's pretty shocking. These companies are not in the business of losing money. Premiums get raised when they project they're going to lose money. The main way they project how much money they need to charge is how much it costs to replace or repair things. There are other reasons why insurance might go up. We'll get into like flood zone maps a little bit in this video, but it's mostly because of material costs. And you guys remember how much the cost of wood went up during the pandemic. The thing is, I think they just realized it doesn't have to go down. I don't know if there's still a shortage or if there's still supply chain issues, but it hasn't come down to pre-pandemic levels. Okay, next I want to talk about this question I get asked often. What if my insurance drops me? There is an insurance company in Florida called Citizens that is like state subsidized. It's state-owned insurance company. And it's for this reason. Insurance companies started leaving because of the increased risk, maybe because of the increased amount of scammers. People seem to think that's a big thing down here. There are some big stories of that, but that's not as big of a thing as you might think. And one of the main reasons that insurance companies started leaving Florida was because of the way they were selling insurance was through all these other affiliates. They had to pay them too much money, and they just didn't establish their own big footprint in the state. So it's not just claims. A lot of it is their affiliates, and lawsuits are the biggest issues that have caused insurance companies to leave the state. And every company does this thing called depopulation occasionally, where they have too much risk or they want to like offload some homeowners insurance policies. They give you the option to find another option. They force you to find another option. Now the rules in Florida is that option has to be 20% more or less. It can't be like double the cost. If it's double the cost, they can't drop you, especially with Citizens. Citizens cannot drop you if you're in the depopulation group and then your only other options are double the cost. My insurance on my other home, the homeowner's policy, is $2,600. When I looked for other options, they were like $6,000, $8,000. They were crazy. Citizens is the only affordable option over there, and affordable is unfortunately $2,600 on that house. Also, the Citizens depopulation group, just not a great phrase. Whatever. Okay, will flood maps change? Yes, they will. it's not so much based on elevation anymore. FEMA has their own mapping software, their own like probably, GPS data and elevation data and projecting and all this kind of stuff. They assess the risk. Now, if you can prove that your elevation is over, I think 11 or 12 feet, that could help. But anywhere between there, anywhere between 0 and 11 doesn't really make a difference. FEMA kind of decides what your premium is if you're going to take part in like the national flood insurance policy, which is the most affordable way to do it. There are private flood insurers that are just a little different. The way they work is different. And honestly, after going through an NFI, National Flood Insurance claim, it's not that big of a deal. If you have a real claim, if you have a real storm, it's a headache in all kinds of ways, but you get past it. It's not the biggest headache. It's not going to bankrupt you. It does get paid out if your premium is current and if there's a real need for a claim. Also, another reality with flood insurance is based on, risk, but also based on material costs as well. If material costs don't come down, flood insurance will not come down either. Okay, another question I get asked a lot is, will my insurance go up after a claim? Maybe, yeah. Especially if it's a negligent kind of claim. It's different than a car accident. My dad actually sells insurance in Oklahoma, a place where they have big natural disasters, tornadoes and hail and floods and earthquakes. So I often hear like his perspective as an insurance provider, and as like he's talking to his underwriter, trying to get things approved and like dealing with stuff like that. So yes, your premium could go up based on a claim, more based on your history as a consumer. If you're making claims all the time, if your credit has recently gone down, a lot of your insurance premiums are based on your credit, because I guess they're just judging you based on your credit. And the final question number 7, will my premium go up after a natural disaster? Also, maybe, but a lot less likely. Natural disasters are out of your control, obviously. So my flood insurance on my other house, it went up right before the flood. Now, maybe it'll go up again. I don't expect it will, because it went up quite a bit. It doubled in the span of 3 years, and that final premium was paid 2 days before it flooded. Hopefully I won't ever pay flood insurance again. That house is currently on the market. If you'd like a really cool house with super expensive insurance, super close to the water. The reality is a lot of people in Florida want that. It's not crazy to have expensive insurance, and the insurance on that house is around $7,200 a year. We have clients moving from Columbus, Ohio that have insurance that is about that high. So when I tell them that for a house with flood insurance, they're like, whoa, that's not too bad. Of course, I feel differently. I don't want to pay it. And I'm curious what you guys think. And if you have any more questions about insurance, I know I haven't done just a talking head video like this in a while, but this is a really good question that someone brought up, and I just want to clear the air a bit. As always, we would love a chance to earn your real estate business. Give us a call, text, or email anytime. And thanks for coming by.